Hi everyone, my name is Philip and welcome to my channel. In this video I'm going to show you what I did to complete my first tax return for my first year of crypto mining. I'm not going to say that everything I've done is correct, all I'm saying is this is what I have done. I want to make it clear that I'm not a tax advisor or a financial advisor. You're personally responsible for your own taxation and you need to seek whatever advice you feel is appropriate to get that information is correct. I would love to use an accountant to do my tax return. I think it would give me a lot of peace of mind, but at my scale where I only have 2 crypto rigs, the cost of an accountant would gobble up most of the income. So that's why I've chosen to do it myself. I also think that having an understanding of the mechanics of tax is valuable information. I'm hoping in years to come, as I grow my crypto mining operation, that I will be able to use an accountant instead. The IRD has a lot of guides on its website. The IRD also has a YouTube channel. It has lots of concepts and example videos. You can also ask questions via the My IR portal, although just note it might take 3 weeks to get an answer. There's also a cryptocurrency specialist division, cryptocurrency, at ird.govt.nz. Yes, the IRD has a cryptocurrency specialist division. While we're talking about the crypto division, you should assume the IRD knows about all your crypto currency transactions globally. Nearly all OECD member states, such as most Western countries like Europe, US, UK, Singapore, Hong Kong, etc., are parties to the CRS agreement. The CRS agreement requires an OECD member country to collect taxation information about any other OECD members, a citizen of any other OECD member, and send it to that country. So if you do use a crypto exchange, let's say in Europe, and let's say send some crypto to another exchange in the US, those 2 countries will automatically report taxation information to the IRD without the IRD even having to ask about it. You should expect from time to time the IRD will compare the information about your global financial activity against what you've filed in your tax returns. You're required to keep this information for up to 7 years, so this information might be inspected quite a bit of time after the taxable activity. If the IRD summary of your global financial activity doesn't line up with what you've filed in your tax returns, you should expect a tap on the shoulder. There are shortfall penalties of up to 150% and criminal fines of up to 100,000. Tax penalties compound, so after a number of years, the penalties can be truly staggering. Everyone has to pay tax on the income they earn. Examples might be wages, interest from the bank, crypto mining, maybe a rental property, selling goods at a farmer's market, etc. Taxes are used to pay for things like hospitals, roads, social welfare, for example. If you go to a hospital, it's not free. It's being paid by everyone who has paid their tax. Okay, let's talk about my situation. I am a PAYE employee and I've just completed my first year of crypto mining. I do a little bit of crypto trading as well. I've decided to act as something called a sole trader. That just basically means you do business personally as yourself. It has no extra special rules or regulations. And if you want to later on upscale your crypto mining business, you can easily convert it to being a fully registered company. I need to file an IR3 and an IR10. An IR3 is basically a summary of your income and your tax paid, and the IR10 is a financial statement. You can file both of these online. The IR3 is relatively simple. The IRD fills in all of the bits of information they already have on you, so you just got to fill out the missing parts. The IR10, the financial statement, is a little bit more complicated. I've created a spreadsheet to work that one out for me. Let's get to the meat in the sandwich, as they say, and head on over to working out the actual numbers. The first thing you need to do is set up crypto accounting software. I like to use Koinly. That's because it's very hard to calculate crypto taxation by hand. For example, you have to calculate capital gains using the first in, first out principle, also known as FIFO, and it has to be based on the equivalent amount of NZD at the time it was paid to you. Let's pretend you mined a constant amount of crypto, and the first day you got paid $19, and the second day that same amount was worth $21 because the crypto went up in value, and the third day it was worth $20 because it had gone down a little bit. Now let's say you sell $30 worth.
Using the FIFO principle, you'd have to account for the gain on the amount for them the first day where it was valued at $19, and then separately count for what was left over from the amount on the second day. This example isn't technically right, but illustrates the complication. Koinly has native support for New Zealand's tax rules. I also asked the IRD about Koinly, and they also confirmed it would be acceptable for the job. You can't use software like Xero for the bulk of the work because Xero can only handle currencies of 2 decimal places. A common crypto asset like Bitcoin needs 8 decimal places. You could use Xero for tracking expenses in the fixed asset register, but because this is such a small amount of the work involved, I don't think Xero is worth it. Koinly needs to know about every one of your crypto wallets and exchanges. Koinly has API support for a lot of the crypto systems. When you use API support, Koinly can natively talk to that system and extract all the information you need. You really only want to use crypto exchanges and providers that Koinly has native API integration for. This makes doing your tax super fast. Otherwise, you have to get a CSV file of all your transactions and import them into Koinly. This can be painful to get. Personally, I won't use a crypto service that doesn't have native Koinly integration because I don't want the tax hassle. Once you have Koinly all set up, go into tax reports, select the right period for the tax report, and then scroll down and select complete report and go download report. With this, you have all the information for the IR10 next.
I was just looking back on the video and I realized I didn't mention anything about record keeping. So part of the requirements are you have to be able to keep financial records for 7 years. So whatever systems you start using, whether it be Koinly or other crypto exchanges and stuff, you're pretty much locked into keeping them for 7 years, so you can keep these financial information. You're allowed to keep information electronically, but it must be accessible. You could potentially export data to CSVs and stuff and keep it that way, but it has to be in a form that you can easily reproduce all the information that's required.
This is the spreadsheet I use to work out my IR10. Actually, it's a cleaned version of fake dates, invoice numbers, and some other info to protect myself from criminals, but all the calculations are still accurate. I use Office 365 to store my info, and I can only create sharing links that last for 30 days. So if you'd like a copy, just ask in the comments below, and I'll create a link for you. Let's start by looking at the source data. This first sheet is the depreciation. Into the sheet goes everything physical you bought that costs $1,000 or more that you'll keep for more than a year. This is basically physical stuff that you can touch and hold. You'll also need to add physical things that cost less than $1,000 that you built into something that costs more than $1,000. For example, if you bought a motherboard for $200, a power supply for $800, a frame for $200, and a CPU for $200 and built them into a single mining frame, they'll need to go into this sheet because altogether they add up to over $1,000. Note that if you had something fail that is under $1,000, like a motherboard, and you replace it, that it doesn't go into this sheet. This sheet uses straight line depreciation because it's the easiest to calculate. The top of the sheet includes a link on how this is calculated. Basically, computer servers can be depreciated at 40% per annum. So as long as your mining stuff is like this, you'll be able to use the same rate as well. As you buy something, fill in the date, invoice number, and who you bought it from. This is my first year of crypto mining, so the opening amount is what I purchased it for. Fill in the depreciation rate of 40%, and all the other columns are calculated automatically. Next, you need to calculate power. You claim the portion of your power bill that was used by your crypto rigs. There are several ways of doing this. My power retailer provides this nice summary report that shows the power consumption in kilowatt hours and dollar cost per month. So I copy that data to this sheet. I then sum up the total kilowatt hours and the total cost on the right-hand side for the whole financial year, and use that to calculate the average cost per kilowatt hour I have been billed for. On each of my rigs, I have an energy meter I bought from Bunnings. It reports the kilowatts being used by each rig. So for each month, I note down the total mining kilowatts that was reported. This tends to increase every couple of months as I buy more and more GPUs. I then use this number to calculate the mining kilowatt hours. Now I can easily calculate the total kilowatt hours used by crypto mining for the whole year, multiply it by my average cost of power over the year, and know the cost of the power the crypto rigs consume. You can use any method that works for you. You might be lucky enough to have an engineer that can simply report the kilowatt hours used per month, so you just need to write it down each month. Now come the expenses. This is all the costs you incur to run your crypto mining business. I also have a YouTube channel about my crypto activities, which I am working to monetize, so I have some expenses you might not have. Just like the depreciation sheet, you enter the date from the invoice number, who you bought it from, a brief description, and the cost. The last column labeled type is a drop-down box listing the 8 types the IRD requires you to classify the expense as. You are most likely to use repairs and maintenance for things that you fix, like buying risers to replace broken risers, or account depreciation and amortization for physical things that you'll be using for more than a year but are less than $1,000, like a Bunnings energy meter. You need to keep supporting information to back all these numbers up for 7 years. I have a receipts folder, and inside of that I have folders for assets and expenses. Every invoice or receipt for something on my depreciation sheet goes into the assets folder. Every invoice or receipt for something on my expenses sheet gets saved into the expenses folder. Note that if you have a dedicated crypto mining room, you can claim expenses related to that as well, but the tax is already complicated enough, so I don't try and claim for any of those extra things. Now we're finally onto the IR10 itself. This sheet starts with links to guides on how to complete an IR10. It lists everything in the IR10 and includes the box number so you can copy it to the same box on the IR10 form. In the notes section, you'll see references to Koinly. From the downloaded Koinly tax report, locate the section in the notes and copy it onto the IR10 form. All the rest of the fields that are not zero are calculated automatically. Leave all the zero fields as zero. That's it. We've done the IR10. Now we're ready to do the online filing. Head over to the IRD website, log in, and then once you're logged in, select Returns and Transactions. Now click on the period for which you want to file a return for. You should see an option to file an IR3. If you don't, then you'll need to contact the IRD to make that option available to you. I'm not going to go through every single screen, but when you get to this key screen, you need to mark that you have self-employed income. Then select the option that this return will include an IR10 financial statement. On the next screen, tick the box saying this return will include an attachment of a financial statement summary. For the self-employed net income, copy box 29 from the IR10, which is the current year taxable profit loss. Now fill in the gross income from box 2 on the IR10. Now fill in the fixed assets from the IR10. That's boxes 33 to 38. And now the non-current assets, boxes 39 through 42. Time for the current liabilities, boxes 44 through 47. And finally, other information, boxes 52 through 59. And now you're basically finished. Congratulations.
I update my IR10 every month. I use it partly to sort of show where I am, but because when you do it monthly, there's only just a little bit of work to keep it up to date. And by the end of the year, when it comes to file the return, it's pretty much finished. You've got at most just the last little 30 days of work. When I look back over the whole process, if I left it to the end of the year and then did it, it would be daunting. Watching back over the video, it's actually quite a lot of work. So if you want to do it yourself, I'd encourage you to do what I do and just do a bit of it every month so that by the time the end of the year comes, there's hardly any work to do. I hope that was useful, and thanks for watching.